Okay, folks, welcome back. We're a minute away from the rate announcement for US CAD. And again, we are sidelined. We are not doing anything today. We're just monitoring. Okay, there's our run up, looking for that void to fill in. Again, I could care less what the numbers are. We're just looking for the reactions at around this time of day based on the economic calendar. Again, a little bit more for CAD, closing that void we noted a little bit ago in this morning session. Good morning, folks. Good morning. Let me see if I can shrink this thing up. Better. So the reason why I'm looking for the CAD to do what's described here is we had this low established with the bodies of the candles right in here. Let me get this off because it's not what I want to see. We still have these equal highs up here. If we go through and close this range, we have stops right above this high here and this clean area up here. So I'll note that now. So we have two levels to watch should we get some real run on the upside. But the reason why I called CAD like you're seeing here is we had equal lows here. The market came down, was hanging around here. And like I said in this morning session, a couple minutes before this one actually started, the expectation in the retail realm is going to be that this is support and there's going to be buyers already. So what they'll do is they'll take the market below that, gun those longs out of the marketplace, assume their positions, and then expand the range and reprice to a higher level. Not a random level, but a level that we would note relative to institutional order flow. Now, on the higher time frame, we're looking at this level here. Let's go back out to a 1 hour. Okay, and that is this range right here. The candle on the 1100 candle on the LTD, Forex LTD for the 6th of September. And the low comes in at 128.97. That's what we have here, 128.97. the actual range would start as low as this wick in here, but I'm more specifically aiming for the bodies of the candle. So, if it doesn't get it, then I don't care, because like I said, I was already telling you, I'm on the sidelines. The expectation of watching it unfold is what we're here for today. So that's what we have. Hang on one second. Since we aren't doing anything today, I'll answer just a few questions. I'm not going to get crazy with it, so that's not an invitation for all 400 of you to come in here and blast me with questions. Like I said, I do have a log from this morning and I have one from yesterday's questions, so that'll allow me to do a little bit more of a lengthier question and answer portion of a pre-recorded video I'll do later on tonight. Just so you guys are aware, I will start having the daily recap done at 3:30 p.m. New York time. So I'll have everything done by then, and we'll keep it like that. That way the folks over in the UK can get to sleep and do what they have to do. The reason why I'm on the sidelines is because of the interest rate announcement for CAD. The order block that we were looking for on pound and here gave way. It was just really sloppy price action going into European session. And I didn't trust the fact that I would have a high probability, low risk scenario. And I said if we lost the order block here, we would want to come down here and probably close in that range. And it did that, and that's not a trade I wanted to take. I don't want to sell cable. So if it's going to give me indications it wants to go lower, I'm not interested. So I'm just going to wait for something to get in line with something that would be bullish for pound dollar. Because I do think it's going on a higher time frame daily chart, that liquidity void we mentioned last night. I think that's where it's ultimately going to try to reach for. So to try to fight that, it would be foolish on my part until things indicate that I'm wrong in that sense. Euro dollar's still holding, man. I don't know. I think they came down here and took the stops here and here, and they may want to expand, take out the high that was established in London last night. Unless it just rolls over completely here, that's what I would expect. But I find it very interesting that it's kept its void intact while at the same time cable gave it all up. So it may come back down here and I mean, it's obviously in a nice value area. It's closed in all this big quick range in here. The market's already came down, cleaned that up. One more time, hit into an order block here. The session we did this morning, I was looking for it to hit that 133.45. Had it done that, I would have been on it long, but not where it's at now. It still has stops below the marketplace that it still hasn't cleaned up in the form of 133.45. So it can run here and be without me on it. That's okay. I don't have any problem with missing the opportunity, but I just don't want to short it. I don't want to be a seller of cable. Yeah, give me a second here. Hold on 1 second. Sorry about that. Phone calls always at the most inopportune time. Okay, let's do this. Let's pause for a second with the questions, and then we get caught up with what's already been posted. and we will do there it is. There it is. Still, I was off 2 pips. I'm still looking. I was looking for 112.75 to 112.80. Now you never want to see it do what it's doing here and still hold on to high probability. Nothing again. I'm not claiming this is high probability. I'm just giving you insights for intraday volatility, so you can see where the market will reach for and frame ideas around that when the overall larger conditions are supportive of high probability and low risk. Given the fact that we had all of the news around 10 o'clock and sloppy action in Europe and London last night, we have previous day's high for euro dollar here. Okay, we ran through it just at London and gave it up, and then we came back down, ran the stops here, ran through it one more time. So right now we have a time stop. Okay, we're waiting to see, is it going to maintain its move away from this order block right here, this down candle right in here. So you don't want to see it go back into that, because there's no reason for it to do that now. It's already broke the initial London high. It's already breached the previous day's high. So if it's good, it should find legs here to go higher and not have to come back and recapitalize. There's no necessity for that to happen now, because it's already ran into liquidity above London's high for today and yesterday's daily high. So now anything above the marketplace that would draw price higher should already be doing it. Okay, so as we watch this candle, we got about 3 more minutes left on this candle. If it doesn't close above the London initial day high here for today, it doesn't look good. It may be just a run on stops. Okay, so again, what we're doing is we're watching to see if this candle can close above yesterday's high and above the initial London high for today. So it came up and cleared out the high that was formed. If it can't do that, this is most likely going to be a stop run. We have a 1, 2, 3 drives higher, clearing out any liquidity above the high. So that may be something we got to be contending with here in a minute or two. Yeah, see, there's no willingness to want to run. And if it's a good run to keep going, once it takes out a previous day's high, or even in this case the initial London high that was established during what is that? Yes, the beginning of the London Olympic kill zone. So let's take one more gander at dollar, still in the mud. Cable. I'm telling you, I still think this thing wants to go for those buy stops. I just do not have a real nice way of getting in there long. I don't like I don't like that price action right now. US CAD robbing me of my objective. I want to see 128.97 hit. Might get it on this candle. Really interesting to see if it can get up here and clear up these stops here. And buy stops there. So buy stops. Let's make that a little bit bigger. So we have this. We'll see if it has any legs to close in this range up to here. So I have a little bit of a void still here, and if it doesn't go for the stops, it can still at least go up here and clean this portion of the void up. So we have that part to look at as well for study. So we're looking for 129.15, 129.14 really is the level. We'll round it to 129.15. So there's our 128.97 level hit perfectly. It'll probably want to jump through that a little bit. Pound dollar, I'm sorry, euro dollar. Oh, good grief, euro pound rather. It cleared its stops out here, and we're back to equilibrium between the range high and the range low. So we're essentially in here. I think it wants to go up here and clear this out. So I'd like to see cable stay consolidated and allow euro dollar to rally, and that would give me the euro pound ability to get up here and clear these stops, and then later on it would free up cable to catch up with euro dollar and go on these stops, because I really want to buy cable. I want to buy this one. If I don't get any other trade, this is the one I'm still waiting for. And we have this little bit of a range up in here. So when you have this on your chart, you put these ranges in as exposed, and you draw them out in time and watch price come all up here and fill them in. That's how you practice with this. Just like we would have had the range down here all mapped out, it would have looked like this. Right in here. Because these lows had already been traded to twice here. We would use this. Okay, and as price was down here, we would look for it to come up here, clean that up, fill it in. It did, and then reach for the order block relative to the hourly chart, which is what that 128.97 is. So it reached up and hit that, and now the only thing that's exposed still is this range here. Right in here. So fair value still exists between 129.10 to 129, big figure. It doesn't have to do it. The highest probability trades are when you're expecting moves like this, go for the low-hanging fruit objectives. That means this is the hourly order block. Okay, we're late in New York session. It's 10:20 essentially. Okay, so we're inside the middle of the profit-taking hour. You won't always get all the move. You'll leave something on the table, but it gives you real consistency in terms of taking your profits and moving to the sidelines. Okay, and then, or if you have an objective like the hourly bearish order block we were aiming for, once it's hit, You can take about 75% of the trade off, leave 25% on, and then see if it has any room to get up here. But move your stop to plus 10, plus 20, something like that, and just let it go and see what happens. Euro might punch one more time higher. We'll see. Still hanging at that bearish order block on the daily chart. Just tagging into that. It's nice that it hasn't really repelled away from 112.60. 112.60 is a bearish order block on the daily chart for euro dollar. So it hasn't really shown any willingness to run away from that lower. But it's still hanging in that consolidated range between 112.65 and 112.35. So again, we'll have to see what happens here. Pound dollar still on consolidation. I'd love for it to keep this price structure it has right here with these two equal lows and a run down in here like that. The longer it stays like this and the more consolidation we build in here, the more favorable it is to go long on pound dollar. Not today, but it will give me a buy scenario for London and New York tomorrow. So if this structure can stay in place exactly as it is right now, that will be such a loaded deal for upside. It'll be like taking candy from a baby. You can quote me on that one. The question is what would I think if the interest rate on the CAD would have changed? I don't even know. I didn't even look at it. Like I said, I don't care. I don't care to know what their actual numbers are. I don't care if they've lowered interest rates or they've raised interest rates or if they left them unchanged. I don't know. I've not even looked at the actual announcement. I just know when they send these information that, when they send these releases and the information hits the market makers and the algos will use that volatility to run for liquidity. So it's not, I don't have an opinion about what would it have done if the interest rate would have done this or that. Like I said, I don't know. And this is another evidence today proving that I don't need to know what it is or even waste my time trying to forecast it, because it's not something I don't think anybody can do consistently. But I can read price like I'm showing you and give you an indication what I think traders are going to do. I mean, they clearly are pricing in a fake support level right ahead of a news announcement with interest rates. So what's going to happen is what I showed in the previous session this morning. It would drop it lower, get everybody out of already long, and get those individuals thinking this is a big bear flag, that they would run it lower, put them on the wrong side of the marketplace. So it neutralizes pending orders. Okay, so in other words, it's taking out those individuals that are long by running their sell stops below the low. It's also putting those individuals that want to play a breakout, that want to sell below this level, thinking it's going to be a big bear flag, okay, and they can run lower in price. Both of those scenarios are the same trade. So the algo knows to reach below those lows, get individuals that are long out, assume their positions, and also trip up individuals that want to sell on a breakout. So what are they doing? They're engineering liquidity for all of the sell side of their wanting to buy. So again, I don't even know. I have not even looked at the economic calendar, and I won't, just to prove to you I'm not concerned about it. That calendar only tells me what time the good stuff comes into the marketplace. It's like a TV guide, like I mentioned yesterday. I said that I don't watch a lot of television, but I know the principle. It used to be when we had television where it was only like 4 or 5 channels in the U.S. You had 3 major channels and you had 2. I don't know, I can't remember what they were, 54 and 45, and then you had channel 13, 11, and 2. So that was your 5 channels. Now you got a million channels, on premium TV, but the TV guide would tell you when your shows would come on. And we're going to hit that bearish order block in here, right there, 112, 129.15 we're looking for. 129.14 is the actual level, but I'm looking for around number 129.15. But the, UHF and VHF, thank you for helping me with that. The But we would go to the grocery store, or if you subscribe to the TV Guide as a subscription, it would be mailed to you every week. And you could just go through the TV Guide and see what time and what day your specific shows of interest would come on. That's how I use the financial calendar. I just look at when is the big events coming. If it's a high impact news event, interest rates or FOMC stuff or anything but non-farm payroll. Non-farm payroll, I just avoid it. But if there's a high impact thing throughout the calendar week, I just go through and I make a notation on my notepad next to my desk, and I say, okay, this time of day I want to be looking for a scenario to run for liquidity. If that's not, I'm going to look for a turtle soup buy, or I'm going to look for a turtle soup long, or I'm not going to say, okay, I'm going to be looking for our optimal trade entry long here. Okay, I don't know what the condition's going to be until we get real close to that time of day and that day of the event. And you just look and see where the liquidity is resting in the marketplace and think like a market maker. Okay, who's in the market right now and who would be profitable if a bullish move would ensue or a bearish move would ensue, and run scenarios through your head as to which side would have the most money at risk at the time. And that's all I ever do. It's not rocket science. And once you understand that where the liquidity is and where the institutional order flow will most likely drive price, when this happens over and over again, when you see it every single day, we're in here giving indications about what the market may reach for. You're not trying to trade every single day. You're not. But you're learning that we can call moves every single day. It's not important for you to make money. And I can't stress this enough. You guys are trying to get on every possible scenario. Just because we're discussing it doesn't mean it's a trade. You can practice and you can do demo, and that's fine. You get experience that way. But what I'm trying to teach you is, number one, just because I can call the moves doesn't equate to always putting money at risk. It's hard. It's really hard for you as a new trader to understand that and grasp the importance of it. But believe me, it's like this every single day. There's so many things that you can go through the marketplace. That calendar is the goal. That's the treasure map. Okay, you'll know what the market maker's playbook is with that calendar weeks ahead. You know there's going to be a trade every single day. There's a high impact news event. Now, I'll ask this question openly, okay, as a means of sentiment and understanding. What if you looked at the calendar and the majority of the calendar for tomorrow or the next day after that had no medium or high impact news? What would that indicate for you as a trader? What would you do? Or what would you not do? Or what would you expect? Exactly. Low volatility, take a vacation day, just relax. Don't expect a whole lot of movement. So if that's the case, now you know, okay, well, when should I trade the London session? When should I trade the New York session? Well, it starts with that economic calendar. You want to know, do I have a high volatility event due in London? If it is, if it's just one, that's the easiest one to operate in. Now, what happens if you have 2 or 3 high impact news events, maybe even in correlated pairs like euro and pound? What would that indicate for you for that trading session? For instance, say there's one high impact at 2 o'clock or 3 o'clock in the morning for fiber or Euro USD, and say there's 2 high impact for 4 and 4:30 in cable. What would you think that would do for London session? It would take it all over the place. It would not be as pristine and so easily discerned in terms of price action unless it was just one event. The manipulation is going to happen on both sides of the marketplace many times if you have 2 high impact or more, and especially if they're in correlated pairs. So it'll take you up and down ultimately, and then you might end up getting a winning trade and come back and run your stop, and then it'll either scare you to get back in or it'll just run the other way and railroad you. So when you're using the calendar, you need to be focusing in on, is it just really one high impact event? Because then you know that the odds are slanted and the manipulation is going to be on one side of the marketplace. That's it. It's either going to be against the buyers or it's going to be against the sellers. So, and what you do is you go through and you study where price has been, where it's at right now, if it's holding a consolidation, where is the most likely outcome going to be for the money? Obviously, they made money shorting yesterday in dollar CAD. So where's their stops at? It's going to be above this swing high, and they're going to squeeze those individuals that have a stop right above here, even if it never goes above that high. You think that the folks that are watching this scream up like this are going to want to hold on to their short? No way. No way. And that helps the market maker and the algo distribute positions that they accumulate down here by buying. Every time they run up here higher, 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 even if the stops weren't triggered here, they're going to be what? Buy stops. So if the level goes, I'm sorry, if price goes to that level, it injects a huge amount of buy orders into the marketplace. Why is that influential? Why is it necessary? Well, because the buy orders that they have down here on the bank side of the book, to exit those longs, hang on one second. Sorry, tickle in the throat. The longs that the algo, excuse me, the longs that the market makers would accumulate down here, okay, to get out of a long position, they have to sell. So they have to have participants that want to buy from them. So when they run these stops here, the buy stops that are being trailed for short holders from yesterday's sell-off, when that hits that right there, it injects the market with buy stops. Now, here's what happens. Those buy stops become market orders to buy to market. Just because you have your stop there doesn't mean that's your exit. Sometimes you'll get slipped because the gap that occurs when it trades right to this high here, it'll trade to there and the next print will be here. And that's how you end up getting slippage. You get worse than your stop. Okay? How many of you ever had that? Anybody got worse than their actual stop loss order? That's why you get it. So it's not that you have your stop loss right there and you're protected. You're going to get slipped all the time. And that's the intent. That's why they'll gap it through old highs. So by having this understanding, once they know that these highs are ran, any short holders that are watching this thing scream up like this, they may have their stop loss up here, but they're panicking now. They're like, I don't want to get stopped out. I'm going to take my profit in here. So to cover their short, they're going to do what? Buy. They got to buy it back. So that allows all this range in here to pick up all the squeeze on the shorts. And it also takes them back up to an area of old valuation, which is a bearish order block inside this exposed range. Okay, so all those things, every single day when we talk, you'll see by repetition, you'll see the general theme that I use is very generic. It's very specifically aimed at understanding how to take the money out of the marketplace that is poised to be profitable or put those individuals on the wrong side. And that's the game. If you understand it by watching it over and over and over again, you'll see it's consistent. It's not guessing. It's not guessing at all. I mean, clearly, hopefully, we've been at it for a week now consistently, and you guys are seeing every single day something panning out exactly to script. So when the conditions are ripe for trading, now imagine how fun it will be when we go in and we're finding high probability setups and we're looking at the levels and understanding how liquidity runs are engineered and how institutional order flow takes part in how price moves around. Then trading is going to be amazing for you. You'll really enjoy it. You will feel less impulsive to get in there because you'll know, I'm just going to wait around and see what we talk about today. And if it meets your expectations or lines up with what you already expected, then you'll feel good. You'll feel confident. I'm not providing a signal to you then. I'm just giving you the highlight of what you saw in your own study. That's probably most likely what's going to happen. And again, this is not, I'm not bragging. When we're in this realm, the egotistical ICT can't exist here. If he's here, it will get in the way. And that's the reason why you hear me. I'm very specific. I'm focused. I'm not talking about any of that. I do all that stuff on my other Twitter feed. But again, not for glad handing or bragging. Have we not been consistent every single day with outlining what the market should be doing with very specific, detailed direction and levels for it to reach for? So submit the time. Okay, we're going to be here for a couple months now. Okay, it's not going to happen overnight, but you'll learn by repetition, by looking over the shoulder with me, explaining to you why it should take place, not just saying here's the signal, here's the indicator. I'm giving you the frame of mind to understand why the algo will process and deliver price as you see it here. It's not buyers and sellers. It's not supply and demand. It's the fact that the algo will reach for the most pain, because if they can't get enough money out of the market where it's at now, they'll either engineer interest in buying or selling it, or they'll run it quickly against those individuals that are already in play. And short sellers were profitable yesterday, and they kept them in a range, hoping that they were going to believe that this is going to be a big bear flag. And you know the move, A to B, and then they expect C to D leg go lower. Sorry for your loss. It took it the other way. So you have to think like you are the ultimate control of where price is going to go. And if you could do it, look at price. You all know, even as new traders, you all know what the classic chart patterns are. Bull flags, bear flags, pennants, triangles, head and shoulders, tops and bottoms, all those ideas, those principles. If you see those things in charts, you got to start thinking reversed. Okay, reverse engineer those classic chart patterns, because those patterns will build in sentiment. And it's not just you that thinks that way, it's the large funds, because they're continuation traders. Very rarely do you see a large fund trade as a contrarian. They don't exist much. Generally, they're long-term trend followers. So when you see these classic continuation patterns, they're very easy to trade the other way. If it looks like a bull flag, it's probably a top. If it's a bear flag in the charts, it's probably a low. And this is just one of the indications today where it panned out and you got to see it. Do me a favor, stop where you are right now. If you don't have your question already in, just hold it. Okay, trust me, just hold it. I need to go through what we have here real quickly, and anything that's germane to the discussion we've had so far, I'll answer. If it doesn't, I'm just gonna leave it for commentary on tonight's session. So I'm going to blend yesterday's questions I didn't get to, this morning's questions I didn't get to, and then ones I don't answer here, I'll have talked about. I'll talk about that rather in the 3:30 session today, which will be pre-recorded, so it won't be a live session. So you guys can go about and do your business, watch at your leisure. Yep, there you go. We did not run through on euro dollar like we were looking for. Consolidation still on that, and dollar is still in the doldrums. So we see. All right, real quick, I'm going to try to breeze through these. Basically, everybody says don't trade the news, but we used liquidity to get fast, high probability moves. Okay, Sebastian, high impact news, and you'll learn a lot about this stuff also throughout the months. But when we see high impact news events that are due out, just know that the big moves will occur around then, and we want to look for evidence before the fact of that news being released. Is there an indication that it wants to go higher or lower? And you'll learn all those things as we go. But the news, we're not trading the news, we're trading the volatility that will be introduced to the marketplace at the time of that market release in data. Yeah, I can turn around on a dime, and sometimes I have an expectation in London to see something unfold that will be bullish or bearish. I don't trade my will. I don't trade my idea. I trade what the market's giving me, and sometimes the market's going to change gears and do something entirely different. And would I be stupid or wise to adapt? Obviously, you have to adapt to what the market's going to do. So we're trading price, not my belief. So I may be changing gears going into what my initial analysis was calling for. Sometimes I'll just change gears and then I'll adapt. Yeah, if you highlight an object on MT4, hold down Control and double tap and drag away, and it duplicates it. Awesome, thank you. Again, I really appreciate you guys when you send comments through this, but please don't do it. It just creates a lot more questions and things to go through. If you like something, just put a thumbs up on the forum. That's sufficient enough. You're already paying me. That's thanks enough. Uh, Gordon, there's no way you're going to be able to program the algo. The things that I teach are so, there's a lot of parameters. Let's just put it that way. If it could have been programmed, and I took computer programming, I would have either done it myself or I would have hired a group of programmers to help me engineer something automated. A kill zone is a time of day we trade between specific hours of the day. If you haven't if you're listening to me now, if you have not watched the videos on my tutorial page on my website, you need to be watching Sniper Series, Precision Trading Concepts, and the Market Maker Series. They will fill in all the gaps in your understanding, and the vocabulary that I'm using, they're all explained in those 3 series. So you have to watch those. Folks, I'm not answering any of the new questions. I'm trying to go through the ones that were already posted. If not, if I don't do this, I'll be here forever. Very good, very good. How many trades do I take in a week? Well, I'm aiming for one that will pay out 50 pips or more. And if I can get 75, I'm done for the week. So I'm generally trying to aim for just one setup a week. But I don't have a problem with if I have a lot of time. And usually now that I'm doing this, I don't have a lot of time. I'm focusing on lessons. I'm focusing on email answers. I'm focusing on accounting issues, PayPal double duplicate payments. I got a refund. All my free time has been consumed. But when I was free and the kids were back in school, if I felt like a deviant, I would go in and do intraday trading a couple times a week, 2, 3 at most. But generally, I'm a one-trick pony. I just want one trade a week. Medium impact news is just as good as high impact news. So between medium and high impact, those will frame the high volatility movements that we're looking for explosive setups. Okay, I don't know how to pronounce your name, so I'm just going to spell it. Enea. Enea. I'm not sure if I answered it earlier when I said what I said about the ranges, but it says sorry, but that part of void had been traded before. Can I explain? I'm going to ask you to answer if I did or didn't give you an adequate answer for that. If I didn't, I'll explain that one, and then we'll close up the charting portion. If I did, then great. Australian dollar tonight has has a high impact news around 9 or 9:30. So I might give you guys something to watch on Twitter. We won't be a live session on charts, but I'll give you something around that time through Twitter to watch. Yeah, I don't see anything in cable that I want to do right now. So anything with order blocks and all that, I'd rather it just maintain its range now. That way it can expand out of it going into tonight, and that'll give me a really good setup for London or New York tomorrow. Yes, Paul. The market makers will pair their orders. If they're long, they're going to look for individuals to pair them up with retail buy stops because they're going to want to sell their profitable exits to willing participants to buy. So they're going to engineer and pair up orders with buy stops above current market pricing, and vice versa for looking for lower prices if they're short. Um, they're going to want to buy it back at willing participants that want to sell below the market price. It takes a little bit of understanding and thinking, because we all understand buy, sell higher, and sell high and buy lower. We understand that, but you have to reverse that theory and think, if the liquidity provider is the market maker, how can they be profitable if everybody out there could potentially be profitable? How can they be profitable if they're taking the other side of the marketplace? I mean, it's never questioned by anyone when they get into this industry. Okay, if someone's making a market, where does that money come from? Where is it coming from? Well, if you're out there in interbank level, okay, it's coming from a bank entity. It's either going to come from the central bank offering it, or it's going to come from a institution that has taken the other side that the market maker will pair you with. So it's their control of what you're getting grouped with and paired up with. So it's either going to be a position that makes them a profit because they know where they're going to drive price, or they'll put it with someone else that they don't care about. You know, they're just facilitating a trade. You'll learn all about it. Trust me. It's very illuminating once you understand it all. What will be the catalyst for volatility to wake up? The bond market to move out of this long-term consolidation and contract volume to move out of September into. Right now, we're entering the fall months, and it's a transition from summer volatility to the fall volatility. And as we get a couple more weeks into September, you'll start seeing there's a lot more volatility, a lot more cleaner price action. It'll probably be bigger ranges soon as we approach the election. It'll probably contract again in the states when we start looking for what the president election is. As we get closer to that, it may contract again a little bit, but obviously once we get the elections out of the way, then it'll be crazy. I don't think we're going to have a quiet December. I think we're probably going to have all kinds of action all the way through the holidays. Okay. Question is, you were looking for 33.45 in cable to run the stops. Do funds really move their stops on a 5-minute chart, or would they be willing to hit the retail stops there? Okay, the question is this level down here. The funds aren't going to be jamming their stops up with an intraday level. Okay, they're going to use a level that's derived from a weekly chart and I'm just telling you where the near-term volatility and the liquidity on the low end is going to be resting here, because the banks had dealings at that level. Okay, so it may not be them coming after a fund when they run the stop. It could be offsetting a existing position by another bank. And it may seem like cannibalizing, but it's not, because it's all glad handing. Okay, I'll do for you now, you do for me next week. So trust me, there's a lot of information that I just can't jam into one session, and that's why it takes months to go over. And we have a theme for each month that will teach all these principles around concepts and find them in the chart, because they're there all the time. But just know that the funds aren't using intraday stops. That's not what they're doing. The stops are relative to a daily or a weekly chart. But this is near-term area for near-term institutional order flow. Okay, if you're making mistakes by following multiple sources and you're getting conflicting signals and then you're acting on one and you're getting poor results, the answer to that question is really just stop following two sources. So if you have subscribed to someone else, or if you're watching someone else, it would be better for you not to be following me, or just follow what I'm talking about for the next couple of months, because I'm going to be probably diametrically opposed to everyone else. Is it a good reason to enter the pound dollar during London kill zone? Yes, because it makes the higher low generally in that time window. I saw someone post on Twitter 6 to 9 in Forex LTD for the kill zone, it's 6 to 10 because you got to get that last 9 to 10. So it closes at 5 a.m. in New York. The kill zone closes at 5 a.m. New York time. So it begins as early as 1 a.m., but I'm focusing you guys generally on 2 o'clock to 4 o'clock because it will generally make the higher low between there. But I want you to understand that the entire London Open Kill Zone begins as early as 1 a.m. in New York time, which on Forex LTD is 500 to 10. So just understand that. It's a little bit wider than what I've given, but I want those that are following in this mentorship to focus on the setups between 6 and 9, which is equivalent to 2 o'clock in the morning to 4 o'clock in the morning, because that's usually when you're going to make the higher low of the day. Yes, I look at yields and T-notes still, but they're for a longer term perspective. When you see price action fill liquidity voids, how do you know which order block will on which time frame takes precedence? Alan, that takes a lot of experience, number one, because it's not obviously, and you've probably already seen this in yourself in your own studies. It's not every up candle is a bearish order block, and not every down candle is a bullish order block. You have to frame things around the context of where the market wants to go on a higher time frame. You need to see if there's a willingness to want to expect volatility in that direction, and that can be combined by what we're using with the calendar. High impact news, we know that there's going to be runs on liquidity at that time. Is the market showing an unwillingness to go the other direction relative to what you're indicating? That means, did it take a stop and run out stop rate before that? Then you can start looking at above the marketplace, the order blocks above you, start noting them as bearish order blocks. They may be areas to actually take shorts at, but if you're below the marketplace and there's enough range to trade up into that, there's a setup there. You can buy into that range and trade that range and be inside the range and not even escape the boundaries of that range. But over time, the notations that you make with me on a daily basis, the study and the experience that you see, you will learn the method that I use because you'll see me applying it every single day. I'm not changing parameters, I'm not changing things around. What you're learning is how I actually use these tools myself. So it's a hard thing to teach just in a tutorial, but when you watch it every single day, you'll learn it by default. You'll know what I should be expecting, and you'll hear me say it, and you'll say, I knew he was going to say that. And you'll have the charts, and you'll end up sending me charts right before we do the sessions, probably on Twitter, just to prove that this is what you're expecting, and then you'll end up hearing me say it, and it'll be just like you have on your chart. So that's the goal in mind. You're all going to think like I think, and if you don't, it doesn't matter. You're going to get better at your price action study, but the goal is you're going to have the same methodology that I use and I employ every single day. It's a flow chart perspective. I do this, then I do this, and if it doesn't give me that, then I go back to the step before, and I make another decision. Do I take action or do I wait? And it's all this is going to be for you, but you have to take one component at a time, and it's going to be delivered on my timeline, not everyone else's, not because you can't afford 5 months of it, not because you can't afford to be here for 12 months, or you just can't wait. You're going to wait, and you're going to pay, and you're going to wait, and you're going to pay, and you're going to wait. But every single month, you're going to have a greater understanding about what those concepts do for one another in concert with one another. Just relax, and you'll get exactly what you wanted. You'll know exactly what you hope to learn. And here's the thing, you don't even know what you're going to learn and how good it is. That's what I'm amused by, because you're excited, and then you get impatient, and then I get some emails like, well, when are you going to talk about this? Don't ask me when I'm going to talk about anything. I don't want to give you a schedule outside of what I'm going to talk about for this particular month. I only want you to know what I'm going to be teaching this month, because the billing cycle is on a 30-day. I want you to know that what I promised to deliver and teach that month, you're going to get it. And then you'll decide if you want to go further. Trust me, you're going to want to continue to go forward. But I want you to take the bite-sized pieces I give over the next 12 months and just focus there. Don't try to go outside the lines and color and try to, I'm going to show him I'm learning faster, I'm going to be ahead of. Don't do that. Because number one, you're going to either distract me from the timeline I'm trying to unfold with everyone, or you're going to do something and rush. and you'll be not taking advantage of the time, and just live in the small little segments of teaching that I'm giving you. I've already told you it's 12 months. So there's no way for you, you're not going to shortcut it. I'm not going to let you. You're not going to do it anyway because it has to be done over repetition. And seeing it every single day, you'll learn. So you'll know which ones to, which order blocks make sense. And when they don't work, it gives you indications like I did last night. I didn't want to do anything with London. Okay, and I think everything else is pretty much comments. Yeah, pretty much. So if you asked questions past when I said ask them, I will see them in the log for this recording. So I'll have 3 logs I got to go through, make notations on which questions I know I didn't answer. And again, during the live sessions, if you have comments or like a high five type thing, that's really not necessary. I appreciate it, but it's just a distraction. So we really want to be streamlined and let both of our times be focused and very efficient while we're doing these. And again, I don't want to do question sessions like this, but because we didn't really do anything today, we just monitored. And there we go. We closed in our range, hit the bearish order block, midpoint of the bearish order block. Right there. Just fell short of it, but we went right into it. So we cleaned all that up. A range of 90 pips, not bad. Not bad for guessing. So I'm going to leave you with this. One more quick pass through on dollar maybe reaching up on that lower area down here. And I did ask that gentleman or lady, I don't know if it's a man or a female, but let me go through here real quick. See if they... I don't see it. Yeah. Oh, that's that. In closing, just real quick as a question and for feedback, are you guys learning anything so far? I haven't given you any of the structured teachings yet. Like I said, I'd get 2 of them this Saturday. But have you learned anything yet during the entire week we've been doing this? We actually technically started with a soft launch a couple of days before September 1st. But I mean, are you learning anything? Good, 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 good. Because if you're not learning, I got to put more work or emphasis on specific things I'm talking about, and that's the reason why I need to stay inside of a clear, defined itinerary for each month. So that way, before we leave that area, everybody's on board and their answers their questions have been answered, and then it frees me up to go to the next module or next month. So we need to be making sure that we have taken inventory with everyone, and if they're learning, that's the goal. If you're not learning, I need to dial in real quick and get you up to speed before we go to the next month. So the bulk of the things will be taught to you before the last week of the month comes. That way you'll have the majority of the time that's needed to go through it, and you'll have the opportunity to ask me questions about those specific things before you start a new month. Okay, I'm going to close it, folks. Thank you very much for spending your morning with me. Hopefully you guys saw one more thing for price action study. We will be back doing a recap for today. I'll have it in pre-recorded format. Every single day will be a 3:30 online link in the forum, and I'll link you to that link in Twitter. And last bit of business before I close up shop here. If you're listening to this video and you're having difficulties finding where I'm putting these video links, they are going into the forum. When you sign into the forum, you know what? It's better if I just do it. Hang on one second. I need to do this, that way I can have peace of mind. Okay, and then I know some of you are new and you feel like you're missing the boat, okay? But trust me, all the stuff's recorded. Anything that's time sensitive will be on Twitter. So you'll get that immediately to your Twitter. Don't think I'm giving you analysis and trade ideas in the recording because that's not efficient. There's no way that everybody's going to be able to know in an efficient way where they can practice. Okay, if it's something that's timely, it'll go in to Twitter and I'll highlight the idea on a chart or in commentary in Twitter. The videos are just to give you a deeper explanation about what it is that either is expected to come later on, we have a lot of time to get ready for it, or recap what's already happened. Okay, so just relax. The videos are not time sensitive. They're not. The analysis that I give in Twitter, that's the time sensitive stuff. Okay, so when you have time, okay, let me get this stuff out of the way here. When you sign on to the forum, every single day I'm going to give you a link. When I post a link to Twitter, it'll give you the date and the session title or whatever. Okay, and then it'll give you a link to the forum. Before you click on that link in Twitter, you need to have access and already have the forum opened up with your password and username. So that way when you click on, it'll allow you to go right into the actual folder. Otherwise, you got to go in, sign in, and do all that business. But you're going to go to this right here. You're going to go to the news. Once you sign in, you go to news. Right now we're in the month of September. So every live session that's recorded or any pre-recorded session or teaching tutorial that you get 2 per week delivered on every Saturday. People are still asking where's the teaching for this week. They are only delivered on Saturday. So you are getting 2 of them this week. You'll click on this link here for September. Now, when we start the month of October, there'll be a folder that's going to be labeled ICT Mentorship Month, October 2016. And then in November, it'll create another folder. So all the content and all the ideas or teachings or specific principles that are dealing with that individual month are going to have their own individual thread. So when you see the link, it'll take you to a folder in here, everything for September, and you'll go down to the most recent one. It'll open up. Like last night I did an edit and I added the PM session. Just like I'll have today, I'll have the morning session, I'll have this session here, and then I'm going to have the recap. They'll all be in a Wednesday, September 07, 2016 post. I'm not going to have 15 posts for multiple sessions for one day. I want everything easily found in one date. So that way you can go back and find it all. It's going to be easy for folks that keep tabs on the things I say. That way they can make notations. So anything you hear me talk about in a specific video, make notes. If I make a call about what I think the market's going to do, where it's going to go to, take those notes and you do that yourself. And that way you can go back and find the videos relative to those notes with these dates. And it's very easy for you to go back and do your own research. I cannot do all of every possible well, for instance, this video, I'm all over the place. You know, I can't come up with a way of breaking that down. But if you take notes during the video and date them, you'll be able to go back. Oh, he talked about the cable going to the buy stops on here and here and here. Or he's talking about the dollar going down to this level or up to this level. You can go back and hear what my thought process was at the time. Because you're going to forget a lot of things. You're going to forget a lot of stuff. That's why it's important that you take notes. Then you can go back and say, okay, yeah, he did talk about that. And he did mention it was going to be a market maker sell profile. Or he was talking about the expectation of equilibrium and expansion down to a run on sell stops, and then the market go higher, reaching for the buy stops. All those things are for your learning. I know this stuff, but you're not going to learn it unless you really take advantage of note-taking. You have to do that work, and that's why I said it's expensive. Not expensive for $150. It's expensive because you got to do a lot of work to get this stuff to digest it. So again, when you get to the video link, when you get on here, there's 2 ways you can do it. You can click on the link. Okay, when you click on the link, it'll open up a blank page that everybody's freaking out about. But look down here in the lower left-hand corner, and you'll see that it's actually downloading. Okay, so don't freak out. When it's done, you're just going to click on it and open it when done. Now, I'm done. That's how quick it was for me to download last night's video. Now, I don't know what your ISP speed is. I don't know what that is for you, but I'm using Infinity from Comcast. That's how long it takes for me to download it. So when I hear people saying it's 45 minutes to an hour, I don't know what's going on. But you can do it that way, or, and this is what I tell you all to do. On all video links, go to the link, okay, and on your mouse, there's a right button and a left button. You want to click on the right button. Click on that, and then it says Save Link As. Click on that, and it'll give you the opportunity to directly download it right into your folder. You can name it whatever you want. Like this is a directory name for that file, okay, and it would be, I would be doing 2 copies of it if I downloaded it. I'm not going to do it, but you click save and it downloads it, and then boom, you have it right in your hard drive. You're not watching it, streaming it online. You're going to watch it right from your PC, and you can see everything crystal clear, high definition, no buffering, no none of that stuff. It'll be right in your library will complete, and that's what you want to do. You don't want to get to 12 months and say, man, I wish I would have done all this stuff then, because it's going to be a lot of videos, And this way you can group it. You can create your own individual directories and folders in your own computer. And once you have all of them, burn them onto a CD-ROM and save them. Anything can happen. God forbid something happens to me, and I don't keep up with paying for the website, or I don't keep up paying for the forum. Okay, and it's gone. You've invested the money. I don't intend to die anytime soon, but something happens. You know, I can't stop God from taking me out. But if it happens, you know, at least you have a library of what you paid for at that time. And it's just, it would be foolish for you not to accumulate the videos as we do them by doing the right button click on your mouse and save link as, and it'll directly download the MP4 file right to your computer. Okay, so hopefully that's answered the question about what it is and where these things are at. But the Twitter feed, that's where all the time-sensitive things are. So Raj, don't freak out when I'm saying I'm going to send the video out later than you want. It's not time-sensitive material. Time-sensitive material is always going to be directly sent to you in Twitter, in chart or commentary only. I'm not oblivious to the fact that not all of us are on the same schedule. But if you're getting a tweet and it has something to do with timeliness, then obviously it's going to come through Twitter, because it's a direct message directly from me to highlight a specific thing that's unfolding in the marketplace. So with that, folks, I'm going to close this long-winded session, and I will get back with you later on this afternoon. I'll link everything on a post with this recording, the morning session, the middle session that we're doing now, and the pre-recorded session will go up all at one time at 3:30 today. It'll all be there. So I'm not going to upload multiple portions. I'm just going to do it all at one time. And by 3:30, you'll have all the links. Okay. Again, time-sensitive stuff's on Twitter, so don't freak out if you haven't seen the video. If you're clicking on the webinar links to, and the invitations, and you're not getting anything, that's because it's already over. So this is one of those long ones that shouldn't be the general rule. We should be doing 10, 15-minute durations, but because we really didn't do any trades today, I gave you some housekeeping stuff that I had to talk about, and then we talked about the US CAD, which is nice because it's not one of the pairs that you're used to hearing me talk about. So with that, folks, have a pleasant afternoon, and I will catch up with you later on.